Hello friends, in our previous lecture we have started with the last chapter of first part, that is dissolution of partnership form. We have discussed the theory points and also we have discussed the format of journal entries only required which are to be passed in this chapter. Again we are repeating that format and then we are going for the journal entries of the chapter. Okay, so I am reading all the entries. I hope that you all are having the written entries, so you may see in your book, I may see in my book. Okay, so format of journal entries. Now the first entry is regarding distribution of reserves, surplus, profits and all the credit balances. So how to distribute all our credit balance? So partners are credited, all these balances are debited. So reserves debit, investment fluctuation fund account debit, workman compensation fund account debit, P&L account, credit balance account debit to partners capital or current account in their ratio which is given, that is old ratio only will be given. Now next second entry is regarding distribution of debit balances and fictitious assets between the partners. Again these all are the debit balances, so for that partners are debited and these all balances are credited. Now the third point is regarding the asset, and there are 2 points. That first, all the assets are closed at their book values and transferred to realization account, not revaluation account, realization account, except the cash and bank account. All other assets means if any asset is recorded in the book, you have to first close them, and again if you are realizing that amount from it or you are giving it to partner, then next entry will be made. So first to close the asset, realization account debit to asset account. Why? Asset is having debit balance. To close down credit asset and debit realization. So realization to sundry assets. Next, how to use or how to dispose that asset. In first way, asset is sold, then we are receiving cash bank, so cash bank account debit to realization account. Now name of asset is not to be written because asset is closed. Next, or we can transfer that asset to any other partner, so partner will be receiver, so partner's capital account debit to realization account. Now when unrecorded asset or any income is brought in the books, now that is unrecorded, not in the book, so we cannot close them. Directly we are receiving the amount from them, so cash bank account will be debited, realization will be credited. Now next, for liability. First, all the liabilities are closed at their book values and transferred to realization account. For that journal entry will be liabilities are having credit balance, so they are to be closed, so all the liabilities are to be debited, realization is to be credited. Now again, how to use the liability? Same like I said, we are paying the liability or any partner is paying the liability. If the business is paying the liability, then cash bank goes out, so realization account debit to liability account, realization account debit to cash bank account. Or if you are giving that liability to any partner, so partner will be receiver but he will pay that amount, so realization account debit to partner's capital account. Now next, you have to close all the provisions appearing such as bad debt reserve, depreciation fund and discount reserve. So all these are the credit balance, debit them and realization will be credited. Now next, if any unrecorded liability is to be paid from the business, so we cannot close down that liability, directly we have to pay the unrecorded liability and the entry will be realization account debit to cash bank account. Next, payment of dissolution expense. Again, don't debit dissolution expense, this is also an unrecorded expense, so for that realization account debit to cash bank account. Next, if any partner accepting the liability to pay the dissolution expense, then for that what should be the entry? There should be 2 entries. First entry will be realization account debit to partner's capital, and next entry will be partner's capital account debit to cash bank account. Big amount will be in first entry, small amount will be in second entry. Okay friends, now next last entry, because as I said, entry number 11, 12 and 13 are only for your understanding, that will not come in your journal entry. Now last entry is when, not last entry, still one entry is the 10th entry, when loan of partner is paid, so partner's loan account debit to cash bank account. And then 11, 12 and 13, yes it is correct, 11, 12 and 13 all are such entries which are not asked, just we have to understand them. Okay friends, so after taking the understanding of this thing, now we are going to see the exercise which are having journal entries. Now come to page number 311. In page number 311, question number 4, only 8th question. Then in question number 5, question number 1 to 12, and in question number 6, question number 1 to 8. Only this one page is only our sum, other all the sums are ignored for board exams. Not this time, every time these all sums, big sums are not coming from this chapter. In this chapter, as I said, one MCQ will come, one small sentence, one sentence question will come, and two questions in section C. One will be compulsory theory and one will have theory, and in or they will have journal entries, only 3. Okay, so now we are going to see this small journal entries. Okay, so first we are going for question number 4 in that 8th one, because all other are theories. Only question number 8 is there in which journal entry is to be written. Okay. Total assets of the firm at the time of dissolution is 2 lakhs, out of which 40% are current assets including cash of 10,000, 120% realized for fixed assets, while 80% is realized for current assets. Pass necessary journal entry. See friends, in this directly amount is not given, so we have to ascertain the amount. Total assets are 2 lakhs. From this 40%, if I am not forgetting, yes, 40% are current assets. So 2 lakhs 40% is 80,000. Again there are two more types. It contains 10,000 cash back. So remaining 70,000 will be other current assets. Now for first part of assets, 40% are current assets, so remaining 60% will be fixed assets, and 2 lakh 60% is 1 lakh 20,000. Now how much amount is realized for fixed assets? 120%, 1 lakh 20,000 into 120%. This electricity problem is so much nowadays. 1 lakh 20,000 into 120% is 1 lakh 44,000 we are realizing, and for current assets 80%. So current assets will be only for 70,000 because cash bank is not included in it. 80%. So 70,000 into 80% is 56,000. Total amount realized 144 plus 56 is again 2 lakhs. But friends, these 2 lakhs and these 2 lakhs are different. Why different? Because they are explaining total assets in the business are 2 lakhs. In that 40% are current assets, remaining 60% are fixed assets. So 40%, 2 lakhs into 40% is 80,000 are current assets, 2 lakhs into 60%, 1 lakh 20,000 are fixed assets. Now out of these current assets 80,000, 10,000 is cash back. So remaining other current assets will be 70,000. Now how much amount is realized by selling them? We are selling these assets. Fixed assets 1 lakh 20,000 into 120%. So 1 lakh 44,000 is realized, and current assets are 70,000, not cash back. Current assets are 70,000, in that 80% is 56,000. So total amount we are receiving as 2 lakhs. Now we have to write the entries. Now how to write the entries? First we need to close the assets at their book values. Next we have to sell off them. So journal. First entry is to close down the assets. Assets are having debit balance. To close them, they have to be credited, and realization is to be debited. So first entry will be realization account debit to sundry means all, but we have to show which are that, to fixed assets, to current assets. Now fixed assets are rupees 1 lakh 20,000. Current assets are rupees 70,000. So total assets which are to be closed are 1 lakh 90,000. As I said previously only that cash bank we cannot close, because cash bank we can receive or we can pay, but we cannot close cash bank account. Okay friends. So first entry is for closing down the asset. So for closing down assets are having debit balance. So realization is to be debited. So entry will be realization account debit to fixed assets to current assets. Fixed assets are rupees 1,20,000, current assets are rupees 70,000. Okay, and both are closed. Now next entry is for receiving the amount by selling the asset. So for whenever we are receiving the amount, cash back is to be debited as cash back is coming in, and realization should be credited to realization account. And how much we realized in total? 2 lakh rupees. Okay, thing is over. So question number 8th question is over, and this will get 3 marks. How? 1 mark is for calculation, 1 mark is for this entry, and 1 mark is for this entry. Total you will get 3 marks from this sum, because first you are showing in business how much are the assets, how much are current assets, how much are fixed assets. In that cash is this much and remaining assets are this much. Then how much amount we are realizing by selling of them is this much. And finally you are closing both the assets and then you are receiving the amount from both the assets. So question number 4 is over. Now in question number 5 there are again 12 questions that we are going to solve. Okay. Question number 5. We will give the heading journal entries, because now various entries will come. Okay, and all the questions we cannot complete today. So how much we will complete today? We will complete today. Then remaining entries we will complete tomorrow. So I will make the format date, particulars, LF, debit, credit, and there are so much entries, so I am making this format. Okay. And narration you don't have to write. That thing is very good. You don't have to write narration in such entries. Okay? That is a good thing for us. Yes. Again, I will draw here also. Okay. Now, question number 5. In that, now we are reading. Today we have to complete only 10 entries. Then tomorrow, 11th and 12th, and question number 6 full. So tomorrow we will complete this chapter. Today's target is only from number 1 to number 10. Because the previous sum also we have completed. Question number 4, we have completed 8 sum. And in question number 5, we will complete only 10 entries. The remaining entries we will do tomorrow. Okay, so that you can understand easily, and I will explain in detail. Now read the first one. On page number 311, question number 5, first one. At the time of dissolution, book value of goodwill is 56,000, no amount is realized. So how much are the journal entries required here? Goodwill is shown in the books rupees 56,000. So we have to close the goodwill. For that entry will be realization account debit to goodwill account. Now they only are telling that no amount is realized for this goodwill. So second entry, that cash bank account debit to realization account will not come, as we have recorded in the previous sum. Because in previous sum realized value is given, and here they are telling that we are not realizing any amount, but we are only closing down the goodwill. What we are doing? We are only closing down the goodwill. So entry would be number 1. Realization account debit to goodwill account. Amount is 56,000. And next entry will not be recorded, because only they are telling only goodwill is given, no amount is realized. Narration is also not required. Okay, now we read the second one. In the balance sheet, land building 8 lakhs and investments 2 lakhs are disclosed. Disclosed means given in the balance sheet. Respectively 9 lakh and 1 lakh 50,000 are realized from them. So first of all we have to close land land building and we have to close the investments as they are given in balance sheet. Now we have to close them. Now in second entry, 9 lakh and 1 lakh 50,000. So total 10 lakh 50,000 is received by selling both of them. So 2 entries will be passed here. Now for number 2 entries are passed. So A entry. Okay. So A entry will be to close down. Now for closing down the assets, realization account debit. 2 land building account and 2 investments account. Now land building is given in the books 8 lakhs. So credit side 8 lakhs. Then investments are given in the books rupees 2 lakhs. So total 10 lakhs are to be closed. Now in second entry, that is B, we are receiving total 10 lakh 50,000. So cash or bank, right? Cash or bank account debit. 2 realization account, in bracket we will write 9 lakh plus 1 lakh 50,000. We cannot show it separately, directly only we will show together amount 10 lakh 50,000, 10 lakh 50,000. You don't have to think profit or loss also, okay? Just you give the entries only this much. For each number you will get 1 marks, not for this. Including both entries you will get 1 mark. This only one entry you will get 1 mark because they are testing your knowledge. That goodwill is given in the book, so you have to close it. No amount is realized, so only one entry will come, and for that you will get 1 marks. In the same way here, land building and investments are shown in the book, so they are to be closed. Now amount is received from them, so cash back to realization. So in this transaction necessary entries were 2, so again you will get 1 marks. Now we will read the number 3. Total assets are 2 lakhs, out of which 40% are current assets including cash of 10,000, book value is realized. So this is similar as the previous, what we have done now, it is very similar, and calculation also we will show it here only. Okay, so number 3. For number 3, first we have to show the calculation that total assets are Total assets are 2 lakhs. Now in these 2 lakhs, %40 are current assets. So 60% will be fixed assets. So 2 lakhs 40% is 80,000. Now in this 80,000, 10,000 is for cash, so 70,000 will be other current assets. Now 60% are fixed assets, so 1,20,000. And what they are talking about realization? Realized book values of each. Means how much is shown in the books, only same value is realized. Now how much journal entries are required? 2 journal entries. First we have to close the current assets and fixed assets, and then we will receive cash back from these assets. Okay, so we are writing entry A. Entry A would be realization account debit to current assets account to fixed assets account. Current assets we have to close only 70,000 because cash is not closed. Fixed assets are rupees, we have to close 1,20,000. And total amount to be closed is rupees 1,90,000. Now the second entry, book value is only realized. So again, cash or bank account debit to realization account. Book value means total book value is 1,90,000. The same amount is realized while selling of the asset. Okay, so number 3 is over. Now going for number 4. But before going to number 4, again I will explain this number 3 because this is same as previous question. only the change is realized. Realized amount was different there. Here it is little bit again different. Total assets are 2 lakhs. 40% are current assets, 60% are fixed assets. Now from these current assets, 10,000 is cash which we don't have to close. So remaining 70,000 will be other current assets. Now these fixed assets are rupees 1,20,000. And how much amount is realized? Book value, same book value which is there is realized. So first entry is for closing down this asset. So entry will be realization account debit to current assets and to fixed assets. 70,000, 1,20,000, total is 1,90,000. And the same amount only we are receiving while selling the asset. So again cash bank is coming in, cash bank account debit to realization account. Okay, now we are going for number 4. Okay, goodwill is not disclosed in the book, but 50,000 are realized during dissolution. Now this is the opposite of this first entry. In first entry, goodwill is disclosed in the book, so we have closed the goodwill, realization to goodwill, and no amount was realized, so only second entry we have not recorded. Now here, goodwill is not disclosed in the books, so goodwill is not disclosed, so we don't have to close. Only 50,000 are received from it, so this is a unrecorded asset, and when amount is received from unrecorded asset, we don't have to close that asset, only amount will be received, so cash bank to realization. So cash bank account debit to realization account 50,000. Okay, again I would like to say, understand the difference between fourth one and first one. In first one, goodwill is disclosed in the books, but no amount is realized. So only one entry required to close the goodwill. Second entry to receive the amount from them is not required because no amount is realized, it is clearly given. Now in fourth one, goodwill is not disclosed in the book, so this entry will not come. But still we are receiving the amount while selling of it. So cash bank account debit to realization account 50,000. Okay, now next. Number 5. The value of laptop is 35,000. Partner is taking it for 25,000. So value of laptop shown in the book is 35,000. So we have to close the laptop with 35,000. So entry will be realization account debit to laptop account. Now again one partner is taking off. We cannot sell it. Partner is taking. So partner will be debited and realization will be credited. So again A. Realization account debit to laptop account with their book value rupees 35,000. Then second is partner is taking off that asset. So partner's capital account debit to realization account. Partner is taking off that asset for 25,000. So amount will be 25,000. Number 6. A partner has accepted to pay loan of Srimati. SMT means Srimati, 40,000 which was given to the firm. So partner is accepting to pay the loan of Srimati. So partner is accepting, so partners will be debited or will be credited, that we have to think. If partner is taking off the asset, then partner will be debited. But here partner is taking the liability and that liability is loan. So you have to now think, friends. Don't just write the entries fast that partner will be debited and Srimati's loan will be credited. First you have to think that if we are paying the loan, if business is paying the loan, then what will be entry? Loan will be debited, cash bank will be credited because cash goes up. On entry we have written in the format, when partner's loan is paid, loan account debit to cash account. Now here that loan is not paid, but by us, it is paid by our partner. So again loan will be debited and partners will be credited. Partner will not be debited because partner here is taking off the asset, so partner is debited. But here partner is taking off a liability which is not to be closed because loans are not closed. We have to close only assets and liabilities. Loan is a different thing. We don't have to close. So entry will be only one. SMT means Srimati loan account debit to partners capital account. If business has paid that loan, then Srimati loan to cash bank. But if partner is paying, then Srimati loans to partners capital. The amount is rupees 40,000. Next, number 7. Income tax liability is now payable 30,000, which is not recorded in book. We are paying income tax which is not recorded in book. Not recorded means an unrecorded liability is paid, so entry will be realization to cash bank. Don't think that income tax will be debited. It will be not debited because it is an unrecorded asset or unrecorded liability. And in all the terms, see, when we are selling off the asset, we are not writing the name of asset. We are just writing cash bank to realization for all the entries. So in the same way also, when an unrecorded liability is paid, only realization debit and cash bank credit. You don't have to mention the name of asset or liability or anything. So entry would be realization account debit to cash bank account 30,000. Number 8. After making payment of all the liabilities and loan of partners, surplus of assets is 1,20,000. Profit and loss ratio of ABC is 5:3:2. So they are telling that after giving all the payment, surplus means profit on revaluation, realization is given, and which is to be distributed among partners in 5:3:2. Now friends, profit is a credit balance. Always profit is a credit balance, for that partners are credited and realization is to be debited. So, or else I have given this entry in the format also. Entry number 11 is this only. Realization account debit to A's capital or current account, to B's capital or current account, to C's capital or current account. Now, the profit is rupees 1,20,000, which is to be distributed in 5:3:2. So 1,20,000 divided by 10 into 5, 60,000 equals to 3 equals to 36,000, and equals to 2 equals to 24,000. Number 9. Machine is disclosed in the books 2 lakh. Book value is realized. Machine is shown in the books as 2 lakhs. Again 2 lakhs is only realized by selling. So entry A, realization account debit to machinery account 2 lakhs, 2 lakhs, and cash bank account debit to realization account. We are realizing the book value only. Again, same amount will be 2 lakhs, 2 lakhs. Okay, now last entry for today. Remaining we will do tomorrow. One partner has accepted the liability to take the dissolution procedure, and in return of it decided to pay the remuneration of 20,000 on account of expense. Firm has paid 12,000. So friends, here partner is accepting to pay the dissolution expense. So for that 2 entries are required. One entry will be realization to partners capital. Next entry will be partners capital to cash bank. In that, big amount will be recorded in first entry and small amount will be recorded in second entry. Okay. So entry A, the realization account debit to partners capital account. Second B will be partners capital account debit to cash or bank account. Now, as I said, when a partner is undertaking the dissolution process, the big amount is recorded in the first entry. Big amount is 20,000, and the small amount is 12,000. Will be recorded in the second entry. Okay. So friends, again we will understand this thing that a partner is accepting to pay the dissolution expense. See, normal entry for paying the dissolution expense is realization to cash back. But if partner is paying, you can see in your format also, if partner is paying, then realization to partner, then partner to cash back. In that, big amount will be recorded first and small amount will be recorded in second entry. So here one link is there, realization to partner, partner to cash back. Okay. So today we have completed question number 4, 8th entry, and question number 5 from entry number 1 to 10. So now tomorrow we will continue for entry number 11, 12, and we will complete question number 6 also. So friends, that's all for today. Thank you so much.